everybody. I'm excited to talk to you about smart money today, the concept of trying to pay attention to what institutional players are doing when you aren't looking, which is to say, what they might be positioning for during low volume days. And there is a couple of different ways to spot this, but smart money doesn't like to draw a lot of attention to what they're doing. And if you can learn to see those patterns, you can learn to play along and oftentimes get a chance to ride the wave before things take off. So with that in mind, let's go ahead and jump into the first of the indicators that we're going to take a look at today. Okay, let's go ahead and get started on the smart money chart. So this is an indicator that I came up with a little bit ago, and as we previously explained what smart money is, we'll just go ahead and dive into it. You may have seen a very common indicator before, MACD. This will look similar, but it is not the same. So I'm going to show you where it's the same and where it's not the same, but there's a couple of different parts to this that you need to be aware of. The first part is we're going to go ahead and look at is the main driver of the chart is actually going to be a histogram. The histogram here is going to have two different shades of green when it is above zero, and two different shades of red. There's a bright red and like a pinkish red when things get below zero. And what is going to cause that to change is this white line here, which is a faster version of the smart money indicator, and this blue line here, which is a slower moving version of the smart money indicator. The reason why I wanted to see the two different time frames is when we get back to days that we take stronger downturns here, and we'll replay this here in a minute, is because it makes identifying when there's similar to a MACD, like a bullish and bearish movement, because they're going to start to move independent from each other instead of moving together. And as they say, it's better to be early than late in the markets. So why don't we just kind of jump into a replay here. Let's back all the way up to say August 1st, and we'll move this over here, and I want to show you a couple of different things. So we'll let this start to sort of play itself out, and you can kind of follow along. Now, one thing you'll notice here is that as this market has dropped off, you see that we have dropped off down here on the smart money indicator as well, including this early warning here with this dip that you get on the white indicator that you do not get on the blue indicator. So once you start to see some of those little divergences, that's a good clue to keep an eye out. Here's another thing that makes sense to pay attention to. If you notice here, there's a big opening underneath this blue line. That can happen too with the white line, but it's just going to be a little bit harder to see because it's going to be hidden by the other histogram. When you see these large gaps opening up, that usually is not a good sign. And as you can see, the faster moving indicator has started to come into the red. We're starting to get some purple here as both the blue and white line have now gone below zero and are negative. And another thing that you'll notice is that the histogram lines are below the indicator, and that means that it's a little more aggressive that the smart money is exiting, and something to pay attention to. So this gap is not good. These lines coming underneath here. So as you may remember, that's when we got that ugly jobs report at the beginning of the month. We start to see what looks like maybe some stabilization, and then we get that Monday where we get the yen carry trade that had blown up. We get that big gap down. And what was interesting to see was that we started to actually get this crossover here, which showed a much bigger slope than the faster moving one. And in fact, just like it was negative to see some of the histogram below the white line here, it's very positive to see some of the histogram above a line here. That's usually a sign of a pretty rapid recovery. And you can see that those opening couple of bars there were definitely quicker. And just like a gap down over here is not great, here we have a little bit of an opening, and you can see why, because we've been lifted up here, and that is actually a positive sign, but you'll notice that neither ended up staying fully positive yet. And so even though there has been a strong recovery right here starting on Tuesday the 6th, the smart money wasn't quite so sure just yet, and it looks like finally they started to buy into it. We got what I would say just like a MACD is kind of a bullish crossover, but we're both lines are now above 0, which is positive, and we're going to see kind of how this plays out. Now, when it's going to be more of a sustained positive, you're going to see that the blue line is going to stay above the white line. That means that both time frames are good. And what you want to see from here is that they're either moving up in tandem or they're at least moving sideways in tandem and staying at like roughly the same slope and pace. And now see, we get an opening here, and then we got a pretty quick drop off. And one thing, if I can zoom in maybe a little bit here, that I didn't call attention to just yet is you may have noticed that the lines do have these little color changes. And these little color changes are there to sort of indicate that a change in direction is coming, or that a change in behavior is coming. Sometimes it's not much of anything. Sometimes, like right here, it can be a sharp change. So just one thing to keep an eye on is to see if those change colors. It did end up being that it was a sustained downturn. We ended up getting a change in behavior color warning from both of those, and then, sure enough, it looks like we got a change in behavior. So we'll go ahead and let this sort of play itself out. We'll kind of take some commentary here. We get a gap. That's not great. Looks like things are leveling off, but we also had the white line above the blue line, which, if you remember, ends up being kind of a bullish cross. It means that things are moving up quickly. We're still above 0. So one thing to keep in mind is that although sometimes you'll see these slowdowns, and indeed there was a bit of a slowdown there, it didn't go negative. And that's an important distinction, is that the smart money, quote unquote, hasn't left yet until we turn negative. So we want to pay attention. We got another gap. Let's see what happens. Not negative yet. They're moving in tandem, which is good. And there they bounced together. A little bit of a gap there, but it turns out to not be much of anything. Kind of moving along here. And so I think by watching this here, you can kind of start to get a sense of what may happen. This was very interesting here to see that, we get this sharp change in direction. We get these small gaps. That's kind of a warning. Sure enough, we get a little bit of a drop off, and you may be asking, like, okay, well, we went negative here. There's some red. Why are we not seeing a dramatic drop off here? Well, a couple of things. Number one, you got to remember that just because the quote unquote smart money is doing something, it doesn't necessarily mean that the rest of the market is going to go exactly that way. But the second thing is, you can see that it really leveled off and was very shallow, and that the blue line starting to flash those warnings. We get a big gap here. Let's see what happens next. But right up until here, we didn't have both of these turn negative. And so you really can't say, well, we got to throw in the towel here until both are kind of deeply negative. And it turns out that we really get this an early crossover. and we get a bit of a recovery here. And if it's going to be a sustained recovery, we want to see the blue line get above the white line. We do. And so let's pause it here for a second, because we had a couple of sharp ticks up and reversals right back down. And you may be saying like, hey, how come the blue line sort of caught this and the white line? So a couple of things. So one thing is look for the divergence. So the blue line's going to be slower moving, the white line's going to be faster moving. And we can kind of see that this was really just too quick, but we did get some flashes here. And so remember that the concept is when you have low volume, that's when smart money is most helpful, because you want to see what it is that they're doing when others aren't really active. And if we look, most of the volume on the, if you get down under a 30-minute, especially chart, you're going to see most of the action, of course, happens in the opening couple of minutes and the closing couple of minutes of the day. So kind of what's going on in the middle of the day, we're seeing what looks like accumulation of smart money. And so that kind of helped us know that the rest of the day was still going to be in a general upward trend. Same thing here, we kind of look, hey, what's going on in the middle of the day? Looks like both of these are sloped slightly upward, and then we get that. Now this is going to be interesting here, because this was, today is August 24th. This is Thursday, August 22nd. And we had this big gap up to open. We just kind of dropped the rest of the day. And, the smart money participated in that open. But then you see when the volume dropped off, these were curling down, we're getting some gaps, and that's kind of a clue that it didn't look like it was going to really sustain it. But we get a change of behavior warning here. This is really interesting. The volume's a little bit higher here than it has been. If you look back over the last couple of days, this is a real low volume week in the United States. This is when a lot of kids are going back to school, or people are wrapping up their end of summer vacations. And so the volume just seemed weak all week. And, we get a little bit of this movement up here while the market was kind of dipping down. That is not a bad sign for what's kind of coming next. And sure enough, we got quite a bit of a recovery here to close out the week. So this is not a real positive divergence here for what may kick off Monday, but keep in mind that the blue here has stayed slanted, and neither are below zero. So zooming back out for a second, because we had some dips that were earlier in the month, as a matter of fact, some of the worst couple of days here. And when the color changed, the general direction was down. When the color changed, the general direction was down. When this had changed, the general direction was down. So you can see that there's value there in paying attention to what's positive and what's negative. And you'll find that on a 5-minute time frame is where I designed this, so it's really more effective on a 5-minute time frame. You can run it on other time frames. It is going to look a little different. You will certainly get a lot more sensitivity on a 1-minute time frame. And that may give you, if you really are looking for a little more speed, a bit of a heads up. But I have found that I think on a 1 minute, you could get a little bit of a head fake. You might get some whipsaw, but here let's go ahead and follow the white line. We can see that both of these are trending up. The general direction here, it's choppy, but was trending up. This sharp downturn and duck underneath here, just like a MACD, that's going to be what I would consider a bearish crossover, even though they're both above zero, just because of the rate of change. And sure enough, we got a drop. The blue line never really changed and it got a recovery. So here we go. Big gap here. That's not great. Got the drop. Down here, we're below zero. You can see we were forming a bottom here. This kind of formed, and the volume is still pretty low. So we're, following the white line, and the blue line gives us an idea of kind of what to do, just because the volume was low. And again, you kind of have to discount these end of day stuff. Let me go here and show you. If we go back here onto a daily chart and try to use this, you'll see what I'm talking about it maybe not being as effective. Going back into the end of August of 2020, we got a solid movement up out of the pandemic lows once it was obvious that some of the stimulus was hitting, but the buying activity of the smart money peaked all the way back in 2020 and had been steadily declining for some time. So if you had said, hey, here's that gap that you were talking about, we get these changes in behaviors, the general trend here is to drift lower, what's going on? That is, again, why this is not as helpful, because you would have missed a heck of a run up here into the top of 2022. And then if we zoom in on 2022, you did notice there was some change in behavior. There was a little bit of a drop off here, but because, there was no bearish crossover, there was no histograms appearing below zero, you really didn't have a great idea for kind of what was coming next. These aren't really set up to be ultra sensitive at these daily time frames. And in fact, what ended up ironically kind of happening is once we finally did get into the negative, that really was around the time that the market was kind of bottoming. And but even then, if you didn't catch the exact bottom, you would have missed a great part of the recovery here. So that's why I would urge you to use a lot of caution if you decide that you do want to look at this on a daily time frame. It's really even worse if we jump to a weekly time frame. You can see just maybe what the .com bubble did in terms of getting these peaks, but what you can see here is the recovery coming out of 2009, and then ironically, when we move it to this time frame, it makes it look like August 2022 was the right time to buy, and that wasn't too far off. So this might help you a little bit more if you go back down, as I say, to the 5 minutes. That's really where I designed to run this. We're just trying to get a clue as to maybe what's coming next. And remember that the smart money people are not the only drivers of what happens in market action. This is just going to try to give us a little bit of a clue as to what the bigger market players might be doing next. And that's what we want to do, try to anticipate what might be coming next. But as with all indicators, nothing is guaranteed. Okay, so I want to introduce you to my second smart money indicator. This one is a riff on a more common indicator known as a percentage volume oscillator, although I set mine up a little bit different. But it can still be used to help you sort of spot what the quote-unquote smart money is doing. So again, what we were really trying to look at here with the first true smart money indicator is that this is going to measure the performance of what is happening when volume decreases, because we're trying to see what is taking place when volume is low, because theoretically that's when the smart money is active. What the second one is trying to do is this is going to measure the relative strength of volume. So this is kind of comparing what came before it to where it is now. And you can think of this as a way that it's going to help identify volume trends, which could be an early indicator of changes in pricing trends. So the real key difference here is that this one's going to be used to identify trading activity as it increases and decreases. And the theory would go that if there's increased activity, that it is the quote-unquote dumb money, although you'll see in a moment that isn't always the case. And then you'll see the when it's green, that is going to be our indicator for the smart money being active. So really what this is going to try to do here, we'll zoom in on the 5-minute time frame, and we can start to take a look at kind of what some of the differences here. At a lower time frame, you'll notice that we are going to see a lot of spikes. As we discussed, most of the trading volume comes clustered around the beginning of the day and the end of the day. So on a 5-minute time frame, this is going to be a little bit skewed towards end of day and beginning of the day, but of course we want to see what's going on maybe right after that happens to see if there's going to be a breakout of the opening range. And so here we can see that this smart money indicator is showing that things are going up, and this is showing that things are going down. This is going down. Does that mean we want to listen to this one and not to this one? No, not necessarily, and I'll explain why. But first, let's go ahead and close this, and then we'll jump back and talk about what this really means. So how it's calculated is we're looking at the volume of what came before us. Like I said, think of this as more like a relative strength indicator of volume. And so this is going to take a short-term EMA of the volume minus a long-term EMA of the volume, and then divide it by the long-term EMA of the volume, or what you might know out there if you're a math nerd is it's a delta calculation. This is not a cumulative delta calculation. This is just a true change in a relative sense. So what that's going to do is you can think of this as measuring how much energy is in the market. It's going to compare the current activity to how the market was been for a while, and if it shows that it's moving up, that there's more energy building, and if it's a negative, then it's getting quieter. So if you can start to understand the concept of what smart money is, that we want to know what's happening when there's less activity, now you can kind of see why this can be used as a secondary way to verify kind of what the smart money is doing. Because we want to know when there's quiet periods, what is happening. So looking at May, for example, we had just come off of this downturn here, and we've got a lot of this histogram down here in the green, and we can see that this is moving up. That is going to be a positive for some sustained move up. I added this blue line here, which you may have guessed is an EMA, and so in a sense this is an EMA of an EMA of an EMA, but it helps us recognize kind of what the trend is without getting whipsawed. What's really interesting is, if depending on when you're watching this, there's been quite a power struggle here in the last couple of days between the bears and bulls. But the volume has been relatively low on this move up, which some people would tell you is a negative sign because you're not getting a strong push through volume as we've moved up. But what this is really interesting is this is kind of hinting at the fact that this move may in fact be coming from the quote-unquote smart people. But as we said before, we're looking for a change in behavior, and much like other true, just looking at volume for volume's sake, we tend to have what you would call volume sell-offs. And so we can see as a relative level that we had 3 pretty big drops. We opened the day down here and then recovered throughout the day. And what this really tells us is that, this once we see this come down here, that we had peaked in sort of that activity and momentum, and that's a good sign for a change in behavior. You'll also notice that some of these histograms are yellow and not red or green. I program them to change colors depending on what came before it, and they have to meet certain conditions. But a yellow one is one that you want to pay attention to because it is going to indicate that there is a change of behavior as well. And so that's going to try to help us when we look at the market structure, and we'll get into market structure in a different video, that sometimes these momentum pushes can be enough to keep something going in a different direction. So just because something is the quote-unquote dumb money here doesn't mean it isn't going to keep going, or that you shouldn't follow it. Because in fact, when this was picking up, we were seeing selling. So you weren't necessarily doing the wrong thing by selling here if you were trading, because we can see that that's kind of what the crowd was doing. But if we wanted to see an early indication if it was safe to get back in the water, well, at least by that Friday the 9th, we knew for sure, even if you weren't entirely sure here, by the time we went green, this was going to be a clear indication that it might have been safe to kind of get back in the water. So as we go back here, we can kind of put this into perspective by moving back here to see kind of what was going on back in the good old COVID days. And if we look at the crash here, and we can see that things were going okay, and then we get this warning sign that there's a change in behavior coming. Changing in behavior doesn't necessarily mean that this was changing from green to red just because these stayed yellow, but it was like, hey, pay attention. This momentum was building. And so if you looked at this and said, okay, well, you just told me that if we see things moving and we finally get down into the green, that's going to mean it was okay. Well, guess what? This was, continuing to drop. And if I would have gotten in here, it would have taken me a whole month really to kind of get back to where it was if I was trading. Well, again, kind of pay attention here. That's why we have the EMA to smooth this out. March 18th here would have been when it was telling you it was okay to get back in. And while that wasn't the exact bottom, this wouldn't have been the worst time in the world to buy. So we're not trying to cherry pick tops and bottoms here. This is going to be looking for general trends on whether there's more or less relative energy and relative buying and selling in the market compared to, where we are now. So going back to where we are currently, let's go ahead and take a look at a replay here and see if we can go ahead and spot a couple of things. Let's move back here maybe to last fall where we got a little bit of a sell-off. And so, what I'm kind of looking for is to see some of these, bigger changes. Now, each ticker you're going to see is going to have different levels over here. I should have pointed out on the scale over here to the right. By zooming out, you can kind of get an idea of like what roughly the top of the range is and what roughly the lower end of the range is. And you may want to just go ahead and set yourself up there with some horizontal lines that might give you an idea of when to do your own change of behavior here. And I'm just guessing on these lines looking at here. I didn't really go back and measure this, kind of a spur of the moment decision. But, here we can see the EMA had bottomed out here. That was kind of interesting. So this is saying that there was just very little activity, and there was very little activity, and we moved to red. I thought you said that was selling, and that's when but it's not. That's what I'm saying. The volume had picked up. Just because the volume picked up doesn't necessarily mean that it's selling. It just means that there's more people rushing in. And so if you've heard the old Warren Buffett be greedy when others are fearful and fearful when others are greedy, this is sort of what this is saying is, we had this bottom that happened here at the end. We can see that the volume started to drop off as people got scared, but because this is green, this is telling me that the smart money is active and we're seeing this push up. And because we're seeing this push up, now you're starting to see people are rushing into that trade. The EMA crosses over positively here into December. We go from flat to an acceleration. You can see the EMA cross this peak. Now, again, I just randomly put this line here a minute ago. This may not be a valid turning point, but it looks like maybe it's starting to be a valid turning point. And so just because this has turned red and it's quote unquote dumb money doesn't necessarily mean that. But what this is telling me is on a relative basis here, this was the day that volume momentum sort of peaked. And now I want to be paying attention again to, kind of what's taking place when the volume is low. So we had another sustained period here where we were underneath, volume is low, and we're moving up again. We're not selling off. Most sell-offs are going to be volume driven, but that's going to kind of give us a clue. So this one takes maybe a little more nuance and understanding, and we'll do another video here that shows you how to put these together and run them at the same time. But what I said before was that we aren't trying to accomplish the same thing here. The previous one, we're trying to look at quiet times in the market when fewer people are buying and selling, thinking that the experts are going to be quietly making their moves. So it's only going to pay attention when there's fewer people trading so you can follow the experts. What this one is doing is it's checking on how fast or slow trading activity is getting. It looks at whether a lot of people are trading compared to usual times or if things are slowing down, and that's going to help us guess if the price is going to be making a big move soon. So that's going to be a little bit of the difference. And again, this is the riff on a percentage volume oscillator. All right, that's going to go ahead and wrap things up. I hope you feel smarter about smart money and smart money indicators. And as always, I wish you the best of luck.